Imagine waking up tomorrow morning, checking your bank account, and finding your money frozen. Not lost, not stolen, just inaccessible, no warning, no explanation. A silent, overnight banking shift could make this nightmare real for millions. While it sounds like a dystopian fiction, the forces driving this possibility have been quietly building for decades. Today, we'll uncover the new banking shift threatening your access to money, tracing its roots through history, finance, and global banking systems. To understand how this could happen, we need to travel back in time. Banking has always been a story of trust that your money is safe, that your deposits are secure, that governments and institutions will honor promises. Yet, history tells us that trust is fragile. From the early days of gold-backed currencies to the rise of central banking in the 20th century, financial systems have repeatedly faced crises. The Great Depression, the 2008 global financial crash, and countless regional banking collapses all share a common lesson. When confidence falters, access to money can vanish overnight. Now, we are entering a new era: digital currencies, cashless systems, and centralized financial networks where the traditional safeguards are being replaced, and control over your money may be more fragile than ever. Banking has evolved through cycles of expansion and crisis. In the 17th century, the first public banks in Europe issued notes backed by gold and silver. People trusted these notes as a promise that their wealth was tangible. Fast forward to the 20th century, the gold standard was abandoned, and fiat currencies became the backbone of global economies. Governments and central banks assumed control over money supply, inflation, and credit. But this shift also centralized power, meaning decisions about access to money could be made from a single office in a distant capital. Banking crises during this era, from the Great Depression in the 1930s to the savings and loan collapse in the 1980s, showed that when centralized authorities lose confidence, ordinary people often lose access to their funds. The 21st century brought another revolution: digital banking. Today, most money exists not as paper or coins, but as digital entries in a ledger controlled by private banks and governments. Mobile banking, online payments, and cryptocurrencies have made transactions faster, but they also introduced new vulnerabilities. Hacks, system failures, and centralized control mean your access to funds depends on a few lines of code and the integrity of large financial institutions. Governments around the world are experimenting with digital currencies, CBDCs, central bank digital currencies, which promise efficiency and transparency, but could also allow unprecedented control. Overspending. Imagine a system where authorities can freeze, limit, or redirect your money instantly, with no physical bank vaults to challenge their decisions. Experts warn that several triggers could make mass account freezes a reality: severe economic crises, sudden banking collapses, hyperinflation, or geopolitical conflicts could push authorities to implement emergency measures, restricting access to deposits. In some countries, we've already seen temporary freezes during banking turmoil, but the new digital infrastructure could make these actions far more efficient and widespread overnight. Furthermore, the growing interconnection of global finance means that a collapse in one major economy could ripple worldwide, putting millions at risk simultaneously. This isn't speculation. It's a logical extension of historical trends and current technological capabilities. Understanding the threat is not just about fear, it's about preparation. Financial historians argue that diversification, awareness of systemic risks, and alternative stores of value, gold, cryptocurrencies, or foreign accounts can mitigate exposure. At the same time, this shift challenges long-standing assumptions about personal wealth and security. For decades, people believed banks were untouchable, that deposits were sacred. But as history shows, and as emerging technology now enables, that assumption is no longer guaranteed. Governments and institutions hold more power than ever over your finances, for better or worse, and a single policy decision could redefine access overnight. The new banking shift is not a distant theory, it is quietly unfolding, and its impact could be dramatic. Access to money, the lifeblood of modern society, has always depended on trust. But trust alone may no longer be enough. As digital currencies, centralized ledgers, and global financial networks grow, The question becomes, who truly controls your money? History teaches us that crises are inevitable, and the mechanisms that once safeguarded wealth are evolving in ways that could leave millions frozen out. Staying informed, diversifying assets, and understanding the forces shaping finance today may be the only ways to ensure that when the next shift comes, you are not left powerless,